even after today's terrific bounce, there are still plenty of bargains to be found among the technology stocks that got weighed down by the implosion of Facebook and Twitter late last week. Take Cypress Semiconductor, CY for all you home gamers. It's the maker of programmable systems on a chip, as well as chips for touchscreens, microcontrollers, really big business, appliances, Internet of Things, memory chips for the auto market, among other products. After roaring last year, the stock peaked in March because the Cypress gets 40% of its sales from China and Taiwan. We got to find out about that. People are concerned about the trade war. I suspect the Chinese government can't afford to crack down on American chip makers. Otherwise, their tech industry would die on the vine. And we know the company, in particular, this one, is in great shape. Last Thursday night, Cypress reported the latest in a string of better-than-expected quarters. The company delivered a 4-cent earnings beat off a 29-cent basis, higher than anticipated revenue, 5.1% year-over-year, rapidly rising margins. Plus, management gave us strong guidance for the next quarter. That's why the stock surged up 6% on Friday, even as the Nasdaq was down 1.5%. But I think that Cypress would have rallied even harder if it hadn't reported right into the teeth of a panicked sell-off in the whole tech sector. Yep, I bet this stock has more room to run, but don't take it from me. Let's check in with Hassan El-Khoury. He's the president and CEO of Cypress Semi. Learn more about the quarter and where the company's headed. Mr. El-Khoury, welcome back to Mad Money.
Thank you, Jim. Thanks for having me again.
Okay, I want to drill right down immediately. We know that there are trade issues. We know that we're fighting back against China. Let's use the language that the president gives. How concerned are you that this could hurt your business? Because I know our viewers will pay more for this stock if they just get a little more certainty about this issue.
Look, let me first give you my position about the whole trade and IP also. I personally am a big believer in free trade. This really allows companies to innovate, companies to compete on a very equal floor. However, with IP, with innovation, you need to have IP protection. We are where we are, and based on that, we looked at what the impact is for Cypress. What we talked on the call, our revenue is about 1.5% of revenue. It will be impacted by the 25% tariffs. You know, it's not material. Obviously, we're always monitoring the situation. We're heavily involved with the respected parties. We're working on ways to minimize even that little 1.5% that we have. That's direct impact for Cypress. Obviously, we're all looking at what this would do on a macro level. But for Cypress directly, I'm not very concerned about it. It's minimal, and we're, of course, trying to mitigate that minimal impact.
Okay, now, automotive, which I like very much, I know that your background before you even went into semiconductor Cypress was automotive. It represents 31%, along with consumer 31%. I know that autos allegedly, because I'm not as bearish on autos as other people, allegedly are slowing down. But you're getting an increasingly larger portion of the auto. What are some of the new accounts that you're getting, which tells me not to worry about whether growth of autos are flat? You're taking great share.
That's right. I mean, if you look at it, we're both adding new content and also taking share from competition. You know, I've always said we're immune to the SAR fluctuation. You know, people talk and people are bearish on, inventory and quarter on quarter. Automotive is a longer term view. I mean, we're talking about 2 to 3 year design cycle. We have at Cypress great visibility over the next 3 years. We are winning instrument cluster, which will solidify our #1 position we currently have. We are winning in body electronics, where a lot of people are spending money, the features, the comfort and convenience of that car. That's where we play. The content is accelerating, even if we have concerns about the SAR. We at Cypress are a content player. Where do people spend money today in the car? Infotainment. They want to have the same exact user experience when they walk in the car as when they walk in the home. We introduced RSDB with our Wi-Fi product, or Real Simultaneous Dual Band. It allows everybody in the car to stream content to their own device from the cockpit while the driver keeps interacting with the car. These are automotive innovations that we bring in from the consumer space, where we're also very strong.
All right, Hassan, that leads to my next question, which is, I don't think people realize how strong your consumer franchise is. Sonos, Roku, people love these stocks. They love the products. Nest, of course, Apple, Nintendo, Amazon. This consumer business, this group of clients is the fastest growing group of clients imaginable. So are you picking up even more business from these? Like for Sonos, which is going to come public and be wildly popular, you play a key role in every Sonos device.
I mean, absolutely. If you look at the play, and I want to focus not just on a product, but really the cross-selling play that we have. Our cross-selling, which is customers buying one or more or two or more products from Cypress, has increased 11%. So even when we have a footprint in a specific design, getting more products into that same design and enjoying the growth on both product lines is a key focus for our strategy. But we are across the board. The beauty of it, we are winning new accounts, we are winning new platforms, but the key here is really on the platform side. You know, I gave the example on Thursday of LG. We introduced in 2017 the air conditioning with the LG platform, the ThinQ, voice-enabled LG home appliance. This quarter, I talked about the washing machine. That proliferation of the smart home devices, the smart home end systems, is really where we play. And the fact that we provide that proprietary connectivity, which is at the heart of the IoT, allows for that stickiness of that revenue, even in those consumer applications.
One last question, because we've got to run, but I look at your market cap of $6.5 billion, and frankly, it mystifies me. You are playing in every fast-growing area. You are taking share from everyone. What the heck is your market? Why is it it's only $6.5 billion? And don't you run the risk of being snapped up by someone bigger, because you would bring them so many good clients?
You know, for us, we focus on our strategy. We focus on the deployment. Obviously, there's always the, you know, any incoming and any strategic aspects of any public company. And of course, we address that when it comes. But our focus now is what we can control, is the execution, is the shareholder value creation, which we've done very, very well from where we started. You know, I'm coming up on my 2-year anniversary. I think we've had a great ride. Our 5-year plan and our strategy, Cypress 3.0, is playing out exactly like we want it. It's actually a little bit ahead of when I thought when I took over 2 years ago. That is what the market is going to see. You know, our margin is expanding. The market did not give us a lot of credit. They thought we couldn't do it. We've accelerated it. We've beat it. And now the market is, I mean, look at how we traded on Friday in a down market. The market is starting to realize there's value there. There's value still to be unlocked. And I can tell you, myself and the management team are focusing on that extraction of value.
Excellent. And you're doing a great job of it. Congratulations on a terrific quarter. That is Hassan El-Khoury, President and CEO of Cypress Semi. CY would be up much more had it not reported during a tough period for technology. Stay with Cramer.